So after last Thursday's ECB dovish hike, it's pretty much one down when it comes to the central bank action amongst the G10, and a whole lot more to go this week. Chief amongst them, the U.S. Federal Reserve this Wednesday. Hello everyone, Monty here. Market analyst at IG UAE. Let's go ahead and get started because we got ourselves quite a bit to process. I'm going to go ahead and take a look at pricing just because pricing matters so much. Last Wednesday you had mixed results when it comes to pricing data so far. For last Wednesday, hotter than expected. That's why it's highlighted in red there, because hotter than expected. I want to say worse than expected in the current phase. 3.7% for year-on-year. Core notch higher than anticipated, 0.3%. Producer prices headline both year-on-year and month-on-month were higher than expected. Import pricing data, you had positive readings when it came to the monthly figures for both import and export, and the yearly readings year-on-year still negative but rising. And let's just say that a little bit of a test on that front, where it was a bit of a positive when it came to preliminary figures that came out of U of M, University of Michigan, consumer inflation expectation for the 12-month dropping from 3.5% to 3.1%. And when it came to the 5-year, from 3% to 2.7%. So that's in line with what that part is in line with what the Fed wants to see. Its sentiment, though, was a miss. And the other item to note is that when it comes to the week ahead, before just a little bit of housekeeping before we get into all those central bank decisions, of which there are plenty. But we're going to have plenty of U.S. housing data this week. NAHB's housing market index today. You got yourself building permits, housing starts. You got the weekly mortgage applications. And speaking of weekly readings, you got the usual stuff. Inventory data for those of you trading oil out of EIA and API. Baker Hughes rig count. And then, of course, on Friday, we've got ourselves preliminary PMIs. This is going to be quite important because globally, or at least when it came to the Eurozone and the UK, we saw services fall into contraction, sort of follow manufacturing, which was already in contraction. When it comes to the US, these are figures out going to be the ones out of S&P Global, not ISM. And the expectation is that services is going to remain in expansionary territory above 50, but not really much of a margin. It could, it could, if it does miss to the downside, we could actually see it fall into contraction, and that, of course, would be a significant story and a significant headline. But that all comes, by the way, on Friday after the FOMC policy decision, where expectations are that the Fed, coming out of their two-day meeting, they're going to pause at 5.25 to 5.5%. So what's really going to be important in market pricing, courtesy of Refinitiv, it's like 99%, 100%, pretty much fully priced in. So you don't got to worry about a hike this Wednesday. Doesn't look like there's going to be any significant data between now and then that could really influence them. It's already passed. That was CPI last week. But the thing is that it's really going to matter that it's coming with their projections and that dot plot in terms of where members see their future policy decision, and not just so much for this year, where they're expected to keep the door open on just one more rate hike, even if they don't actually do it, but what happens when it comes to next year. And that, as a result, you can expect market pricing to significantly change depending on what they say, their projections, and that dot plot. So that's when it comes to the Fed. It's actually not that large of a story. It's significant, but it's actually not going to be that large of a story. But when it comes to the other central banks of the G10, we're expecting 25 basis point rate hikes out of the Swiss National Bank, the Bank of England, when it comes to the Norwegian Central Bank, as well as that of Sweden. The exception, of course, being the Bank of Japan, which we will get to. But when it comes to Swiss National Bank, they're going to be on Thursday, and by majority pricing in, it's going to be a hike to 2%, though it's less of a worry now just because CPI is below target. Where it isn't below target, well, plenty of countries where it's not below target, what chief amongst them, I should say, is when it comes to the Bank of England, when it comes to the majors, and expectations are we're looking at a rate hike to 5.5%. But here's the thing, where's the peak? Are they going to try and at least put in a pause or a skip at this rate? CPI figures, by the way, for the UK, they're going to be released on Wednesday, where expectations are year-on-year is going to rise back above 7%. So not a positive narrative, but given where data is headed and given where they themselves see inflation headed, then it's a matter of them trying to say, okay, this is a hike, but maybe a pause or a skip from here on out. And market pricing, by the way, generally putting the peak at around 5.5%. And then afterwards, you got the Bank of Japan on Friday. Now, this is where it gets a little bit trickier, right? They've had hawkish talk as of late to try and prevent the yen from weakening, but isn't necessarily going to translate into action. And to tell you guys, to show you guys what I mean by that, I'm going to pull up USD/JPY on IG's trading platform. Now, this is where it was. This is a daily time frame. So this is where we were on Friday, September 8th. And what happened was you had the Bank of Japan's Ueda hawkish talk, talking about, they might, in terms of a change in monetary policy, depending on where wage growth and pricing data is going to end of the year. You saw market pricing shift to actually pricing it to shift from pricing in from negative 0.1% rates, taking it to 0% at the start of next year. You saw the yen strengthen. Yen strengthening means USD/JPY coming down, and then it came down to here. But look what's happened. It's come back up over here, and it's a matter of, okay, well, this hawkish talk, it hasn't managed to prevent what looks like. I mean, they're not going to specify a level of what their red line is, but it looks like it's around 148, or maybe they're worried about it even getting back up to 150. The finance minister Suzuki, he said before that level doesn't matter. It's more about the volatility. They don't want excessive volatility and speculation when it comes to the yen. But it looks like, based on when he spoke, it looks like they don't want to see a big move from there. Now, obviously, they're not going to do anything or say. I don't anticipate they're going to do or say anything until after the FOMC on Wednesday. And then, of course, you've got CPI figures Friday morning as well. And just pulling up this week's weekly market report, everything that I mentioned here and a whole lot more is available over here. I also want to point out that when it comes to central bank decisions, you also have the People's Bank of China. And when it comes to emerging markets, it's going to be a mix between, you got three camps. You got the hike, the hold, and those that are remaining unchanged, potentially PBOC with their 1 year and 5 year loan prime rate. So too when it comes to South Africa at 8.25%, a reduction out of Brazil, and an increase when it comes to the Central Bank of the Republic of Turkey. And just pulling up USD JPY over here, where I got to point out again, technicals ahead of fundamental events, especially in this case, you got both. For the US dollar, you got FOMC. For the Japanese yen, you've got yourselves the BoJ on Friday. Technicals don't hold as much relevance, but these are the levels. And going into it, you've got heavy sell. They were extreme sell when it came to IG client sentiment. They're starting off this week in heavy sell territory at 71%. COT speculators are unchanged and still extreme buy USD JPY at 78%, which means extreme sell yen at 78%. They're also heavy sell when it comes to the Swiss franc at 67%. Well, that's about it for now. I want to thank you guys so much for watching. Good luck out there. And as always, thanks.